All right, good evening, everybody, and welcome to this edition of GSEA Live. I welcome all of you in this live session. My name is Dilnawaz. I am the moderator for the session, and this session is brought to you by uh, EO New Delhi, and we are here to talk about the funding scenario in 2022. So let me give you a quick background about what the program is all about, what the session is all about. So on this live, we host industry leaders, startup mentors, successful entrepreneurs, and angel investors. People come here and talk about their experience, share tips and tricks and important insights about the industry, about the funding scenario, about the ecosystem, and all of these pointers are going to be very, very helpful and useful for young startup founders, early stage startup founders like yourself who are going to watch this session. A quick background about EO, which is Entrepreneurs Organization. So EO is a global not-for-profit organization. It's a support network of 14,000 plus like-minded leaders who come from 61 different countries. Every year, EO conducts Global Student Entrepreneurship Awards, which is a premier global competition for students who own and operate a business while studying in the college and universities. So GSE supports student entrepreneurs with mentorship, recognition, and connection to take the business to the next level. Uh, we are here in this session today, which is the session number 1 for GSE in New Delhi, and the topic is funding scenario for 2022. Uh, Let me quickly talk about our panel and then quickly add our speakers of the day without any further ado. And for all of you fantastic people, if you have any questions, feel free to ask. We have the live chat open, so you can put in your questions in the live chat, and we'll be more than happy to pick them up as and when time permits. So our first guest is Mr. Samir Sood. Samir is the founder of Venture Highway. Venture Highway is a founder-focused seed fund that partners with category creating next-generation technology entrepreneurs in India. Samir has worked in leadership roles with global firms like Google, Microsoft, Cisco, Systems, and many more. The second speaker of the day is Mr. Alex Kumar. He is currently the director of August One. Alex is a private investment is sorry August One is a private investment firm and a MAF regulated venture capital that works with entrepreneurs to help them acquire and build enduring profitable businesses with a focus on long-term equity value creation in Singapore. Mr. Kumar brings in almost 5 decades of experience. He has worked in leadership roles with global firms like Bosch and Lomb, Playtex, Reliance Retail, and many more. And apart from this, he has been a startup founder himself. Our third speaker is Mr. Sandro Stephen. He is currently the vice president at Indian Angel Network. IAN is Asia's largest network of angel investors that invest into early stage businesses and have a profile with the potential to create disproportionate value. IAN is an angel investor network with over 400 plus investors across 10 different countries. It is also the first angel group in the world to go international. Sandro comes with 15 plus years of experience, and he has worked into industry with industry leaders like Airtel and Max Life Insurance. Apart from that, he has founded companies in the past. So this is the speaker's profile. Let me quickly add our speakers on the panel. Samir, welcome to this session. Alex, good evening. Welcome to this session. Thank you for doing it. And Sandro, good evening and welcome to this GSA Live. Can each one of you quickly unmute and say hi to our audience members?
Hello, everyone.
Hello. Hi.
Hi, good evening, everyone.
All right. So let's get started. And as I said, for each one of you watching today, this panel, this session, this live is brought to you by EO New Delhi. If you're a student entrepreneur watching this, make sure to apply for EO New Delhi 2020, GFEA for New Delhi 2022. The application link is in the pinned comment if you're watching this on YouTube, and is also the application link is on Facebook. Comment if you're watching this on Facebook. Uh, Let me quickly do a quick round of the panel with each one of you. We'll follow the order as in Samir, Alex, and Sandro. My first question to you is, how are you? How have you been? How was the past 1 year? How are things going? And did I miss anything in your introduction? Samir, I'll pass it to you for going first.
Thank you for asking. I'm great. Fortunately, the venture ecosystem in India is really developed over the last 5 years. And I'm very excited as a very early stage investor to see some of the smartest people going into that ecosystem. So keep uh, founding, keep building. Look forward to that. one change is the waistline has grown because the travel has increased and hotel stays have increased. I'm missing COVID in some way, where I was bound to the house for some time.
Uh, Alex, same question to you, but do add on if you miss COVID or not.
Well, let's start with COVID. I just recovered 3 weeks ago.
Oh, all right. We hope you're well now.
Yes, I'm absolutely fine. And all I would say is encourage everyone to get vaccinated as many times as possible. The last year has been pretty okay. We were investing in Singapore and then we decided to branch out a little bit. So at the moment, we're looking at starting new funds in Portugal and Finland, and also looking primarily at sort of sustainable food kinds of things. Because if you look at climate change, floods in Pakistan, wars in Ukraine, whatever, food is becoming quite a priority. So although it's not on the top of the list for most startups, it probably should be.
Awesome. And Sandro, you're up next. How was your last 1 year? The same question goes to you. How are things happening at your end? Over to you.
Well, honestly, things have been good. At the initial beginning of the COVID, we did see a slowdown though, but as time started moving in, things got better. And we, honestly speaking, the second half of the COVID, we've seen more investments happening than the regular ones. So the market is back in action. We saw a lot of action in terms of angel investments and also VCs because a lot of our portfolio companies got picked up. In fact, Iron Fund, which is also there along with the network, was also actively investing in a lot of deals, and those deals also got picked up by larger VCs, which were looking at a Series B, Series C transactions. So overall, had been a good year. So there has been action. Yeah, to sum it up.
Awesome. So now, because all of you have spoken about funding scenario in a bit, uh, let me jump onto the most controversial question or a topic everybody wants to talk about. That's funding winter, right? This is the question everybody has been speaking about and talking about, whether on social media or on LinkedIn or you talk about articles and media. Everybody wants to talk about funding winter. So let's address the elephant in the room. Let's start from this question. uh, what's your take on funding winter? So the question is pretty open ended. What's your take on funding winter? Does it exist? It does not exist. And if you believe there was a funding winter, uh, when do you think it's going to get over? If there was none, how's the scenario like then? Alex, I'll open this with you. I want you to give me some sort of a international perspective on this question, and then I'll come to Sandro and Samir to give a more local Indian perspective. So, Alex,
Well,
over to you.
I guess from a macro point of view, with interest rates rising and so on, funding is probably going to become more of a challenge. But one of the things we do at our firm is, because we invest very actively with governments in Singapore, Finland, Portugal, and a lot of our funding is from the government. It's less of an issue, and so I guess what I would say is, if the startups entrepreneurs can sort of link up with firms that have funding available from sources other than family, friends, VCs, etc., it's probably a plus.
All right. Samir, your take on this one? I think you're mute. I'll quickly unmute you.
Sorry.
Okay. Yeah, go ahead.
Can you hear me?
Yeah, absolutely.
For about 18 months, we've been seeing a trend where the markets were getting quite frothy, especially at the growth stage. We only do 0 to 1 seed, but our companies need follow on capital. What we are seeing now is that, as there is a downturn, people look internally to their portfolios first. So A's have become a little difficult, B's have become more difficult. And beyond that, it's very difficult because growth venture has really, really slowed down with the likes of the big guys who were writing the hundreds of millions of dollars of capital. Seed actually continues. We're seeing very, very good entrepreneurs. And in these times, if you actually ask me, it's a fantastic time to be investing because only the strongest entrepreneurs will come out to found now. And they'll come out to found now if they need the capital now, because like you said, it's not the best time for a founder to tap the markets. If the founder can afford to wait, they're probably waiting 3 to 6 months for this winter to get a little warmer. So just to summarize, I think seed, great founders, the number of founders have gone down, but the good founders are getting funding, no problem.
Awesome. Sandro, the same question goes to you. What's your take on the funding winter?
Um, See, honestly, I'll second what the co-panelists have been saying. So we see a slowdown now, a little slowdown, to be honest, from VC's interest because they're now very careful on picking what they want to invest in, and I mean that has been the scenario for the long time, but now they've become more choosy on that. The other is, companies which are more deep tech are struggling because if they don't get funding, eventually they'll fizzle out, right? Because for deep tech, which is yet to hit the market at a larger scale, would have challenges uh, scaling the company up. So that's where the bigger problem is. But having said that, I still believe, and I personally believe this, that if your proposition is interesting enough and your problem actually solving a real good problem, which is the need of the hour, there are investors looking at it there. But the good part is also because of COVID, I think a lot of new sectors have opened up, which is also an interesting space for a lot of VCs. So that's also something that angel investors and networks are looking at. So from that angle, we're looking at it. Yes, there has been a certain, from our end, we kind of find a little. Uh, I mean, there's a challenge in terms of finding real quality deal flow in terms of really outstanding entrepreneurs coming our way, and that's not only with us. I think this is with my discussion with my friends around in the ecosystem, also sharing the same story, right? So that's what the bit is. But otherwise, I think overall it's a situation which is fine right now. But yeah, there is a little bit of a trouble on that side.
All right. So my next question, Sandro, I'll continue with you, and then because you and Sameer generally invest at very early stages, and then
Yeah.
of course Alex invest at little later stages. So I'll come to you and then Sameer. Uh, Other than the funding, how has the ecosystem shift happened? Like, what is there a mindset shift you see in the founders now? Is there a sectoral shift you see in the founders now? What is the overall what is the startup scenario, or what is the startup scene, if I may use that word, uh, especially in India and then internationally, because what I've been observing is, I think 2020 it was a lot of panic, and then things went normal. 21 was a fantastic year. We were literally minting unicorns every week, and then 2020, the moment it came, everybody started speaking about funding scenario. So these are three different years with very different flavor of the ecosystem. So my question to you is, how's the shift like? How's the scenario shift? How is the mindset shift? Sandro, I'll open it for you.
So the shift is pretty good, to be honest. I mean, we're seeing more on clean tech right now on EV side, more on the sustainability side of it. So we're seeing more on those sectors which are actually picking up, and that's pretty good to see because eventually that's also the need of the hour, right? So there is great action on that side, and we're finding some really quality deal flow, quality entrepreneurs coming our way who are kind of really solving a major need of the hour, which probably not be that big right now, but in the future it's going to be the biggest thing ever. So there is a kind of shift on that side. Um the other sectors are also there, but I think the overall sustainability, clean tech has kind of taken a big jump. So that's something that I think the VCs are also keen on, and it's more of a top down effect is what I feel that if if the VCs are interested in a specific sector, I would be more keen on looking at those deals more because I want the VCs to look at my portfolio and it should be in line with what they're looking at, right? Because otherwise it becomes a challenge for me also to support the companies in helping them raise the follow-on round. So from that angle, I think this is the change that's happening. One change which has also happened right now recently because of the funding winter, for some reason, is also a correction in the valuation, right? Because before that, you could see any number thrown at you, by entrepreneurs when they're looking to raise investments. So, and most of the time, especially at the early stage, because they really don't understand the mechanics of actually valuation, because there's no set pattern to kind of value your company at a very early stage. It becomes difficult. But then you can't just throw any random number to investors like that, right? I mean, there has to be some method to that madness to kind of throw that number out. But I think because of the funding winter, kind of there has been a lot of correction that we've seen. So there has been some good side also of that. But yeah, overall, interesting to see how things are changing for the good of the ecosystem overall.
Awesome. Sami, same question goes to you.
Samir, you're on mute.
What we're telling our founders is actually plan for at least 24 months from a time period. And we also, since we're a seed fund 0 to 1, follow on capital is very important. So we're making sure that our founders hit the metrics that are required so that the follow on capital comes. Earlier on, it was just growth, growth, growth. Today, it's growth with some sort of unit economics visibility. It's what we're seeing. Having said that, this is in my life, my 7th or 8th down cycle that I'm seeing. And since we are seed investors and our companies are building 5 to 10 years out, if they start now, it's actually cyclically a very good time to be starting out, because you're kind of at the or headed towards the bottom of a cycle. You can't predict when the bottom's going to come. I've spoken to people from the US to Asia, and they concur that this could potentially go on for at least 24 months. That's my summary. The second thing with the founders is that, look, you can actually have a conversation with them and do some more diligence and go deeper. In 22, in 21, that was very difficult to do because there was a lot of people in the ecosystem who were writing checks, angels, seed funds, high net worth individuals, family offices, all of that peripheral stuff has actually really, really slowed down. So we have the ability now to have a more lengthy conversation with entrepreneurs to at least do some more dipsticks and diligence, which is the way we operate. We have to be very disciplined because we are a small fund, so we can't afford to have FOMO and do these very high valuation deals. And therefore, the extra time for us is quite useful. Founders out there, great time to start up. Typically, if you look at it, the history of founding companies in downturns, some of the best companies are started.
I think that was a pretty interesting take, that I think downturn is a great time to build a startup. Alex, your take on this one, considering the international scenario, how's the
Well,
startup scene happening
let me
internationally?
just talk about Singapore because that's where most of our activity has been, albeit not for the last 24 months because of COVID. But what has happened, Singapore is an interesting place because if you look at the entrepreneurs that are there are very few local Chinese entrepreneurs. Most of the entrepreneurs come from either India or China. Because Singapore is a regional hub, it's got excellent educational institutions and so on. And in the last 2 years, we've noticed because of problems with COVID in China, that has completely dried up. And a lot of Indian entrepreneurs used to relocate to Singapore because of the availability of funding. And that has slowed down considerably as well because a lot of those entrepreneurs used to come from the Singapore educational institutions, and the enrollment has gone down quite a bit. So things are really slow in Singapore at the moment. And that's one of the reasons we thought about branching out into Europe a little bit.
All right. So my next question is on the lighter side. Uh, I just realized I was seeing something, and it struck me that it is not just COVID that happened in last 2 years, and it was not just the funding winter, but Shark Tank India also happened. And I'm pretty sure both Sandro and Samir, who are dealing with early stage entrepreneurs in India, you would have seen a very different level of activity happening because of Shark Tank, especially from the expectations point of view and from the pitching style point of view. At least I have seen some interesting folks quoting Shark Tank here, there, everywhere, and then using that example to justify what they're building. Any such incidents, any such scenario, or any such thing you want to share? Any interesting pitches you heard, and how has your life from as a VC or an angel network changed post Shark Tank India? Samir, why don't you go ahead first on this one?
So, like I had mentioned earlier, we do require some time to do dipsticks, whether they are founder dipsticks, whether they're customer dipsticks, whether they're product dipsticks. Shark Tank is great. Our model is a little different. But you know what? Overall, I'll tell you the one. This is very interesting. I grew up in India. I went to college in the US. I spent 20 years there. And then I came back up. This is year 16 of me being back in India. When I was growing up, Nana, Nani, Dada, Dadi said, you cannot fail. You must become engineer, doctor, so on and so forth. In the last 5 years, the same Nana, Nani, Dada, Dadi are telling all their kids who can afford to take risk, go become startup, go become founder. Now that for us is fantastic. And the buzz around things like Shark Tank is fantastic because India is now looking to build for India large outcomes, and for the world out of India large outcomes. So I think it's a huge positive for the ecosystem, and for the first time I'm seeing a cultural change where Indians are encouraging the next generation to fail, which is fantastic for us as investors, which gives us a wonderful set of founders. All the smartest people I know actually want to start up rather than go to traditional jobs today.
Awesome, pretty interesting take. Sandro, your take on this one?
Ah, yeah. So it's an interesting take, Bill Nawaz, because here, what I strongly believe this kind of really helped the ecosystem to kind of grow and take the next step forward, right? So, if you look at the ecosystem, say 5 years down the line versus what you see today, there's a significant change, right? And I remember when I joined ION in 2013. I mean, back days, startup ecosystem was not even that active. So now what I see is a total different change altogether. Shark Tank has kind of really gone to the root of India. To be honest, that's a good thing that's happened. Uh, yeah, I mean the thesis and the mechanics of investments are a different discussion to be had. We've seen a lot of companies from Shark Tank too. A couple of our portfolio companies have also actually gone up on Shark Tank and presented. The Shark Tank had the power to actually change the dynamics of the startup who's pitching there overnight. To be honest, I mean that's what we saw, right? Couple of companies that we saw who came in to raise investment from us, post the pitch that they did at the Shark Tank, which went live, their scale, I mean, their revenue, their kind of charts were hitting high, right? So, which is a good thing, right? Because that shows that, now the power of media, the power of social media kind of really helps that to kind of take that level. Uh, the only flip side is, I think, on the investment side of it, where we see that entrepreneurs kind of feel that in some cases that they, because they come to the Shark Tank, I don't want them to kind of misuse that platform to just to kind of come and promote the product, right? So rather, if you're kind of looking at a serious way to take investments, the overall, I think so. Shark Tank is a fantastic model. Uh, to create market opportunity for your product. So I think all positive and all kudos to the team who kind of did that. Fantastic opportunity, I would say.
Awesome.
Anupam Mittal is also one of our members, so he's also been actively involved in that. So
Yeah, yeah, yeah. So I'll stick with both of you on this one because I have a very peculiar question continuing on the conversation of Shark Tank. Do you also think there has been some adaptability post Shark Tank from investors in general now to invest in product or non-typical technology startups, right? Because the kind of companies that pitched on Shark Tank were especially in Indian scenario, we didn't see any, or we see only a few apps, right? Like only 1 or 2% or 5% companies were apps or softwares, but most of them were kind of product businesses, or were a derivative or a modernized version of uh, uh, businesses that were done traditionally from quite a long time. So what's your take from both of you, Samir and Sandro? Have you seen so it's a two-part question. One, do you think there has been a shift in investors mindset post Shark Tank, uh, especially for such kind of companies? And then do you also see a increased inflow of such kind of companies because now they get some sort of a confidence that okay, we are also capable of going out there and raising capital? So it's a two-part question. I think Sandro, you can continue, and then Samir, I'll come to you.
So the first part, honestly, for us, there has not been a shift of mind, mind space in terms of what we invest in. We've been sector agnostic that way, and we've looked at a lot of D2C brands or consumer tech related or consumer focus companies that way, and also B2B on the SaaS side or anything on those level, manufacturing also. But yeah, I mean, overall. It's a good thing, like you said, that we see now a lot of startups kind of thinking on those lines and kind of creating ideas based on that, right? Because now they understand what investors look for, and how to actually identify a pain point, right, and then solve on it, rather than actually going and creating something which is already existing and doesn't have really any significant differentiator, right? So that kind of is a no show for no go for any investor, to be honest. uh, so I think that's my two bit on it.
Yeah. So Samir, your take on this one?
So we only do tech, and we only invest in companies where we can help. Therefore, non-tech D2C product brand building companies, we don't even have the expertise in-house and networks to help them. We've met some great founders, and what we've actually done is just sent them to some of our friends saying, hey, look, it's a great team building in this space. But if we can't help a company, we generally don't engage beyond the first meeting.
Correct.
Tech for
But
us is very important, just given our, our founders, our advisors, and what we do at Venture Highway.
yeah, but do you see an influx in the number of applications? And do you meet more founders now who are, as I said, now trying to explore D2C or trying to convert leverage technology for a traditional business? Do you see that number increasing now post Shark Tank?
We do. Again, we don't have the expertise. So when we meet a D2C company, we actually don't know what to do with them because we don't know how to build an India D2C brand. You know what I'm saying?
Correct.
We've never done it before. And therefore, we don't engage beyond the first meeting.
Awesome. All right. Let's shift the gears from Shark Tank now to a little general scenario, and let's talk about the next couple of months of 2022. I'll open this with you, Alex. I want you to give me, and then this can be a general suggestion, general overview, a perspective as well. What do you think are important sectors or sectors of concern going forward, uh, especially for new folks who are going to build companies now? Because one of the critical angles of doing this session is because we're trying to address student entrepreneurs and early stage entrepreneurs as well. Uh, and they sometimes are looking for hot sectors, right? So what do you think are sectors or hot sectors or sectors of relevance that founders who are looking for ideas, looking for problems, they're trying to spot problems, should go after? So what are those sectors internationally, or maybe in South Asia, if you can speak about that a bit.
Well, I was just looking at some data on Indian sectors, and actually, it looks like e-commerce, health tech, fintech, and all those things are still pretty relevant here. Um, internationally, um, those might be relevant, but they're sort of a little bit passe. So I think what's happening more is, as Sandro mentioned, sustainability, food tech is becoming extremely important. We also have this whole issue of cybersecurity, and the other interesting one is that I guess with wars and things like that, there may be some opportunity in defense, especially I would think in India where they're talking about indigenization. Maybe there are some sectors of defense that are ripe for startups, and maybe some funding is available because historically that was all done by the government, but maybe now is the time to think about that.
Okay. And from Indian perspective, Sameer, what's your take on this one?
I think India is very different from international. Given we are a India Valley Fund, I'll give you both sides. India building for India has less of a deep tech layer today
Hmm.
because the customer in India today is not using as much deep tech. Versus India building for the world has a much deeper tech layer because the world requires that tech layer. SaaS, many kind of rails that they're building for the world that is coming out of India. Okay,
Okay.
I speak to people and kind of keep in touch with a lot of Valley people because a lot of our advisors are based there. Some of the biggest disruptions, if you ask me, that are very large sectors. Security was mentioned, and this is only exponentially increasing. The second thing is manufacturing, tech, and robotics. Now, manufacturing is a huge part of the world. And if you look at what is being funded in China and what is being funded in the US, it's manufacturing, tech, and robotics because those are very large revenue installed bases that have not been disrupted for a very long period of time. So when I speak with professors at Stanford, when I speak with VCs, they're looking at some of these sectors. Another sector that they are very bullish on is climate tech. And it could be a slew of anything to do with climate change and making sure that we have a sustainable planet going forward. So these are some of the sectors that I'm seeing talking to people outside of India. And over time, this will come to India.
Awesome. Sandro, same perspective. Add on one more thing for me on this one. There's a concept which is built for Bharat, which is also very, very popular these days. A lot of people are trying to now go deeper into the geography of the country and trying to solve the problems there. Uh, uh, can you also talk about a few of the problem statements, of few of the sectors people can also look onto, other than of course the general tech, non-tech startup sector? So your take on this one. Sandro, you're in mute.
Yeah, so Build for Bharat is a great initiative because that's actually opening up a lot of doors. But for entrepreneur to kind of scale and tomorrow be a unicorn, I think obviously they would have to look at you know local for global opportunity kind of mindset also along with that. Uh, we are looking at a lot of companies which are coming our way, which is primarily looking uh, to solve problems in the Indian ecosystem. So that's happening. So we're seeing it happen, but uh, I won't be able to kind of give out any specifics as such. But here is one very interesting thing that happened to us, which I think would be interesting to share. There's one company which was primarily focused on solar cleaning panel. We invested in them, and that too through the fund, right? So, and this was pre-COVID, and then COVID happened, and these solar cleaning panels were totally out of business. The founders, and then eventually they were thinking of what to do. Engineers, guys, IIT guys, reworked on everything, and the need of the hour was getting ventilators because India was running short on ventilators, right? So ICU ventilators. They within 90 days they started building ventilators, right? So, and that's the shortest time one can build it. And now today they own about 20% of the ICU ventilator market in India. So I mean that's the plus side of it. But yeah, I mean I think that's purely made in India for the Indian market scenario, built in Bharat. So I think that's something which is actually supporting them, and obviously on top of it, the government is kind of running a lot of schemes on schemes and grants, which are actually supporting these companies also. That's a great initiative, I would say, because that kind of helps, especially with early stage companies where the product is still under development mode, to kind of actually complete the POC and kind of hit the market at least. Because now angel investors typically would want to see some action happening or some serious validation being done when they come in with the check-in.
Awesome. And this is where I quickly want to plug in GSEA as well. I think you've picked up quite a few relevant points there, especially from the support from the government as well, and grants being there. And this is where I want to quickly talk about GSEA. So, folks, if you are listening to the conversation till now, as I said in the beginning, this conversation is brought to you by EO, which is Entrepreneurs Organization, and we are talking on the forum. We're talking about GSEA especially. So GSE is a competition which is of course free of cost, and the idea is to support student entrepreneurs. If you're a student entrepreneur building a business back in college or university, feel free to apply. The link to apply is in the pinned comment on YouTube and on Facebook. The applications are open for New Delhi. Other than all the support you get, you also get an opportunity and a chance to win 1 lakh rupees in cash or a local chapter prize money, and also up to $100,000 as a prize money at the global level. So that was a quick plug-in. We'll jump back into the conversation now, and we'll also be quickly picking up the remaining part of the conversation, and we'll keep on. And if of course if any of you have any questions to from any of our panelists, please drop your question in the live chat. We will be looking forward to pick up a few questions, so feel free to do that. Going back to the conversation, all of you are investors, you do this for living, right? What are those top three traits you look into a founder and look into a startup before you make a decision of finally getting the check? Samir, we'll start from you on this one. Give me some traits of a great founder, great team, and great startup that will that if you spot them, you will go forward and get the check.
So I'll start with what I look for, and then I'll go into the founders. The team is paramount in our world because all we are doing is betting on the team. Think about it. We're meeting some founders, we're writing a big check and hoping to nudge them along from 0 to 1 and beyond. So the risk is totally team and founder based for us. Okay. Now, not only is the founder very important, but if you ask me, timing is really important. So I call it the 3 T's. It's timing, team, and what I call market or TAM, the addressable market that they can go after. Is it a very large market? That's what we need. If it's not a very large market, it's not interesting to a venture capitalist. It could be a great lifestyle or a family business, but to a VC, a very large outcome in a very big market. I'm starting with the founder and the 3. There are so many traits that you can think of. I'll name a few. Customer centric. You have to know your customers. If you have not done or had conversations with your customers before coming to us, then you're actually hurting yourself because you don't know what the customer wants. And if you don't know what the customer wants, you don't know what to build. So customer centric, really important. You have to be able to sell. And salesmanship is not just to investors, is not just when you go and sell your product, but you have to be a fantastic salesperson to build a team also. Think about it. So that's the third thing. Your ability to build teams is very, very, very important. And you also have to be very, very focused and prioritize ruthlessly. I'm giving you my top 4, and I have like another 10 of these that I could blurt out. But these are some of the characteristics that we look for in the founding team when we make investments.
Sure. Any startup traits that you look for? Product traits or startup traits? Anything like that that you also look for?
You know, in my experience, first time founders are almost as successful as second time founders. The advantage with a second time founder is they at least know what not to do because they've potentially been there before. Having said that, we don't necessarily say, hey, second time versus first time makes a difference, because some of our greatest founders that we've had in our portfolio are first time founders.
All right.
So that is just, and age sometimes matters, because depending on what you're building, if you're building a gaming company and you're like me, 50 plus, I don't know, I may not invest in you, and you better be a gamer. So the vertical matters also. And I'll give you another example, fintech, right? If you're building a fintech company and you have no knowledge of fintech, fintech is quite regulated. Therefore, you have to, in your team, have that expertise before you start building in these certain verticals, like fintech, like maybe even health tech, um, where it's important. Other sectors, maybe it's not as important.
Interesting points. Sandro, your take on this one. What do you look in a team? What do you look in founders? And what do you look in a startup before you write the check?
Well, when we look into a founder, it's almost similar lines to what others would also say. But I would just, what we do is we kind of see that does the founder really understand the space where he's trying to operate in, right? So, yeah, like rightly put, if it's a fintech startup, do you really understand what you're trying to do? Do you have expertise in the team who kind of does it, right? I would go one step forward on that, saying that listen, does the expert, for example, if I'm running a fintech startup, but I don't understand fintech. I mean, I understand the idea, the pain point, but government regulation compliances, I'm not clear with that. But do I have somebody like that in the team, and is that person really in line with the vision of the company? Is what is more important to me. Uh, as a founder, have you kind of given out ESOPs to them, or do you have plans to kind of give ESOPs? Those are the parameters kind of shows the positive sign of the mentor of the team. One very important thing, and I personally, I keep telling a lot of entrepreneurs, many forums that I kind of attend and panels that I do take, is that for all the entrepreneurs who are listening, try figuring out getting mentors on board. Those mentors who understand your space, and for example, if you're building a healthcare startup, there are two sets of mentors that I would kind of look at. One is a business mentor, the other is the product mentor. So, and if you have such people backing you up who are more credible and accepted in the ecosystem in that particular space, respected people, I think that kind of really adds a lot of weightage when you present yourself in front of VCs. And in fact, that opens up your doors to a lot of good clients also, to be honest. So getting such people on board kind of really helps you. So uh, because that kind of gives me an advantage of the thought that yeah, they're backed by good people, and the team is mentorable in that case, and they know what they're getting into. So from the team perspective, I think that's what we look at. From the startup perspective, what is more important is that are they actually offering a clear cut solution, right? So it can't be all mixed up. So it has to be a clear, crisp solution with a clear pain point being identified. One very important thing is that we would want to understand what is the skin in the game for of the entrepreneur, right? I mean, in terms of whether they have invested their own money in the company, especially with first time entrepreneurs, because that's I have not seen typically second time entrepreneurs or third time entrepreneurs, so called serial entrepreneurs, actually coming back to angel networks or raising money. They know their way out. They'll kind of raise investments through their network and close the deal. But typically what we see are mostly first time entrepreneurs. In that case, we would want to understand that how much of their own money have they invested in the company. do they really believe in what they're trying to do, or just wait for investor money? Because I personally have met a lot of entrepreneurs who come up to me saying that, listen, hey, is there a way I can raise seed investment, not seed, rather idea stage investment, and or if you give me what idea are you guys investing in, we work on that, you help us raise money, and then we move forward. I mean, such entrepreneurs really don't scale or have the right vision to kind of take it forward, right? So, on from the startup piece, that's what we look at. Dilnawaz?
What happened to Dil Nawaz?
You think the winter is coming really got to him? He might have run away.
Where is he?
It's a great question. I'm sure he's in the ether somewhere and he'll log on soon.
Yeah. Are you in Delhi, Samir?
I'm in Delhi.
Ah, okay.
How about you? You're in Singapore.
Yeah, I'm here. I'm here in Delhi.
Oh, you're in
Used to
Delhi.
travel a lot to Singapore. I haven't done as much recently because there's just nowhere to travel.
Right. Yeah.
Yeah.
But Singapore's opened up. I was there. I'm going back.
Yeah,
So,
now things are okay.
yeah.
Not so bad.
Yeah. So while Dilnawaz comes back, maybe what we can do is just, ask another question
Hmm.
and potentially answer it. So what do we look for is one thing that, we just went through. The problem is I can't toggle.
Yeah,
Oh, there we go.
sorry. There was
Oh,
some glitch at
it's
mine.
coming.
Really, really
No
sorry.
problem.
Yeah. Okay. So, yeah, you were saying something. Go ahead.
We were very worried that the winter is coming had got to you and you'd moved to warmer climates. But welcome back.
Yeah,
Thank you.
Dilema,
Thank
so
you.
that question that Samir and Sandro just answered, the only thing they've covered all of it. So the only thing I would add is, in our experience, the difference between successful startups and the ones that failed were really entirely the founders. It had nothing to do with the tech or the idea or the problem. And the issues that we frequently face is if the founder starts talking about valuation and fund and money, they're out immediately. Okay. The second thing we look for is some evidence of honesty and integrity, and also passion. And finally, I would only say is ability to execute their plans. So a lot of people talk well, they have good tech, and when it comes down to scaling or talking to customers or developing their idea or being receptive to thoughts from industry leaders or universities or governments or whatever, that seems to make all the difference. So I would say, absolutely, in addition to what Samir and Sandro said, these personal characteristics we find are extremely important.
Sure. All right. Great points. So I'm pretty sure all of these combined together is more or less like a checklist for startup founders uh, to about of do's and don'ts. And if they listen to this live, I think this has been really uh, this been like a master class for them on how to raise VC money, right? Or it's almost we have I think almost told them all the secrets out here today. My last question to each one of you before we wrap the session for today is one last closing advice that I want to share with startup founders, especially who are in early stages. As I said, most of our people are going to watch this later on are also going to be student entrepreneurs, but I want you to give it more from the perspective of maybe a first time founder or an early stage founder. So yeah, so one core piece of advice you want them to retain. Yeah, that's my question to you is Alex. I want you to go ahead first, and then Samir and Sandro. Alex, over to you.
Well, I guess one piece of advice would be, and I think Samir had pointed this out in one of the earlier sessions, is to make sure that whatever the idea is, that it's actually solving a problem for someone and that it is a problem that has large scale applications so it can be scaled up. If I've had the experience of filing for bankruptcy for a startup for exactly that reason. So most important to make sure that whatever it is we're doing, is meaningful to somebody and it can be scaled.
Awesome. Samir.
Founders out there, it is a fantastic time to be an entrepreneur. VCs such as us are very happy to nudge you along. I seriously encourage you um, in the earlier part of your professional journey to try and do something of your own in startup. This was mentioned earlier. Get good mentors around you, because the 0 to 1 journey or the seed journey, in my experience, and I've been doing it almost 12 years, is the most difficult part of founder and startup's journey. Get the right, not only amount of capital, but the right smart capital. I call it smart capital. And what I mean by that is, get people who have founded before, get people who know your vertical, get people who you can use as a sounding board, get people who can open the doors for you beyond the 0 to 1 stage. That is really, really important to do. So build a smart cap table and start now. It's a fantastic time to be an early stage founder in India.
Awesome. Great advice. Sandro, your take.
I think Sami just summed it up well. I was just about to focus on the mentor piece because I strongly feel that that's very important because it's very important to understand that angel investors or early micro VCs are primarily the guys who take the maximum risk because of the fact that when a startup is born, typically if the startup doesn't succeed, the the failure would happen in the first 3 to 5 years, and that's where we come in, and that's the risk that we take, right? So at that given point of time, you need the right set of like-minded people to back you up, to support you, and to kind of take you to the next level. So pick and choose the right set of people who can support you. That's very important. When you look at co-founding team, please define your roles clearly amongst yourself. Who's the CEO, who's the CTO, who's the CEO? Because we've seen situations where they kind of scale to a certain level, and after that also they don't have clear identified KRAs of who's responsible for what. That kind of creates a commotion in future. So in order to avoid all those issues in future when the company grows big enough, because once it grows big enough, if everyone not everyone can be the CEO of the company, right? There could be one spokesperson. So who's that person? You need to identify, talk to one another, figure who's the best to do. Remember one thing, doing getting into business is not, I mean, it's very easy. You can start a startup tomorrow, but to sustain it, to grow, to make it survive, and to reach to that height where you wanted to see is the challenge, right? So stick around with it, get the right set of people to back you up and support you. I think that's the only way forward that we can take this one, right?
Awesome. And all of these were great piece of advice. And with that, we have officially come to the end of the panel discussion. I sincerely thank each and every gentleman for being the part of this session, generously giving out your time and dropping all of these golden nuggets for our audiences here.